What is up YouTube? What is up Canada? Thanks for tuning in. This is your host Yasin Nizami, and as you know that the purpose of this channel is to educate my audience about the Canadian real estate market in general with particular focus on Toronto and GTA area. And I also cover a little bit of high level macroeconomic factors in terms of how these economic factors are affecting the real estate market, particularly the interest rate, the monetary policy, and how the government and Bank of Canada are making these policies to impact the market. Today's topic is basically the continuation of the last week video where I covered the budget impact as well as the recent announcement from Bank of Canada where they announced that the interest rate can go up earlier than 2023. Now, whether they will do it or not, we will discuss this today and what are the reasons why they will not do it earlier than 2023. So without further ado, let's dive into it. So I covered in my last week video where I discussed that the Canadian economy is heavily dependent on the real estate market. So the economic growth that the Bank of Canada is seeing in terms of the positive news where they assess that they may have to increase the interest rate earlier than 2023 is because the economic growth is heavily influenced by the housing market. As I covered, the real estate market, not only buying and selling properties because it has a lot of impacts on other industries, for example, the construction cost, the lumber, the steel, the housing staging, plus there are some professional services involved, for example, the real estate profession, as well as the lawyers and the accountants and the home inspectors. There's so many things evolved around the real estate market, so that also contributes to the GDP. So if you take the housing out of the picture and you take the government spending out of the picture, then the economic growth is really not positive, it's negative. So when Bank of Canada says, they're seeing some early signs of economic growth, and because of that, they can tap their government bond purchase program and somehow will increase the interest rate earlier than 2023. Everybody was surprised when this announcement came out because all the major central banks in the global picture, like Bank of Japan, ECB, and Federal Reserve, they all have insisted that they will continue buying their government treasury bonds in order to lend money to the government to spend in terms of economic growth activities, the stimulus packages, and also keep the interest rate low at the lowest level, which is almost zero now, to stimulate the economy in the countries. And in the grand scheme of things, Bank of Canada doesn't really matter because it's a global phenomenon that we are living in right now, and every major central bank is right now keeping the interest rate at the bottom low and keep buying government bonds to lend more money to basically drive the activity. The Canadian GDP is heavily dependent on the real estate market. When you look at the data published by the Statistics Canada, it shows the economic growth was 0.4% in February, right? So the GDP, the total GDP went up 0.4%, which is quite optimist news. But if you look at it, the economic growth was heavily depending upon the real estate residential market, because the residential market contribution of the GDP also grew 4.5%, which is quite significant. And when we look at the comparison in terms of how the Canadian GDP is influenced by the residential investment, it's quite significant. Right now, as per Q4 data, it is sitting at 9.27%. So the 9.27% of the GDP in Canadian economy is contributed by the Canadian real estate residential market, which is quite significant. If you remember back in 2006, when the recession happened in US, the US residential investment part of the GDP was 6.5%. It was still considered very high. Today we have 9.27% in Canada. I'm telling you this is because the Canadian economy is heavily dependent upon the residential real estate investment. If we take it out, there is nothing foundational that can keep the economy up. Okay, keep this in mind. So people who are asking to do something to crash the market, they have to think about it. If the market is crashed, the economy is crashed here in this country. Okay, and why I think that the interest rate will not increase before at least 2023, even longer, is because the economic recovery is heavily dependent on real estate, as I mentioned. So think about it. What's happening right now. The government is borrowing a lot of money from Bank of Canada. Okay, so the recent budget that they announced, they said they are spending $100 billion in terms of various different activities, right? Stimulus packages, economic growth, funding other small medium businesses. When government borrow a lot of money, and Bank of Canada is basically printing money to buy these assets. That's how the money is being pumped into the system, right? And they're keeping the interest rate at the bottom level so that they can incentivize the consumers to take more money and spend money into the economy so that the GDP can grow. But what's happening right now, because of the lockdown, we don't have a lot of activity going on, and all the money that is being pumped into the system is being spent in acquiring assets, which is unfortunate. But as soon as the borders are open, the lockdown is over, hopefully the economy will revive, and then the consumer spending will come into the picture. Now, what's going to happen is when the interest rate is kept low and the money is being pumped into the system, this will drive inflation, right? The inflation is inevitable right now. That means the consumer prices will go up. Okay, for good prices, services prices will go up. You have seen the lumber prices have gone up over 300% compared to last year. This is significant. Steel prices have gone up. Construction costs have gone up. Fuel, gasoline prices have gone up. So that shows the inflation is on the rise, and it has to happen. When the government and the banks, central banks, run these programs, the purpose is to drive the economy. But before the economic growth is seen, there are certain things has to happen. So what is happening right now is the interest rate is at the lowest level, which is going to drive the inflation up. So the phenomena is they will let the inflation overrun, which will hopefully grow the economy. Once these lockdowns are over, borders are open, people will start moving around and they will spend money, and that will eventually increase the economic growth. At the same time, because the monetary policy and keeping interest rate low, inflation will also go up. And the only way to control the inflation is to increase the interest rate. So hopefully when the economy grows up and also inflation is going up, they will control the inflation by raising the interest rate. Now, when this will happen, it's very difficult to answer because economic activity has to grow in order to sustain the higher interest rate. Right now, the economy in this country or even in US or other countries is not susceptible to bear the interest rate hikes. So I think the interest rate will not go up anytime soon unless something magically happen and we have so many foreign investment coming in and the jobs are created and the economic activity happens across the board. Then of course we can see that okay, now economy is coming back and we should increase the interest rate. But as of now, the picture is still very blurry, so I don't think this will happen anytime soon. But again, this is just me saying based upon my observation and my research that this is what I'm seeing in the economic landscape at a global level, as well as in Canadian landscape when I'm compared with other countries like US Federal Reserve, Bank of Japan, and ECB contribution into this economy. As a result of that, what will happen actually, the asset inflation will continue to go up. The asset prices will continue to go up. Like real estate, like stock market, like Bitcoins, anything that is a financial asset, it will appreciate and continue to appreciate until such time when the interest rate will go up. And then when the interest rate goes up, the debt services cost goes up, it will apply the pressure on the consumer to less spend the money, because major proportion of their salary, their income will be spent on servicing the debt. When it happens, then of course the consumer spending will shrink, and then of course the asset purchase will also shrink, and then there will be less buyer in the market to purchase those assets. Eventually the prices will go down. When this will happen, very difficult to answer. As I said, the economy has to come back to previous level before we see any interest rate hikes. And unless the interest rate hikes, the real estate market will not cool down. That's it for me this week. I hope this is helpful and give you more perspective in terms of what's happening in the market. at a global level as well as at national level. I will see you in my next video. Take care.